Good morning, Stephen Whiteside here with your daily market outlook for Friday, March 2nd, 2012. In the pre-market this morning at 7:30 a.m. on the East Coast, we have stock index futures slightly below fair value. Commodities are fairly flat, so not expecting a lot of volatility at the open on Friday morning. Now, Thursday was another day in which the disposition of the market was still very sunny. The volatility was still extremely low. In fact, for many of the major indexes, we had an inside day, and of course an inside day is a day of indecision. So for the S&P 500, we had an inside day. The market in the NASDAQ was able to move slightly higher on Thursday. Canadian stock market, most of the major indexes actually had an inside day yesterday, so a day of indecision. Each morning I take a look at the price of bonds, and the 30-year bond is once again back on a sell signal. Now, it's been very choppy in the bond market for quite a while now and very hard to make money. One of the reasons I'm watching the price of bonds is I know that a lot of money is hiding there, and I want to see that money come out to help fuel the rally in the stock market. And you might have seen this headline yesterday, investors hold most bonds since September 2010. So the average investor is putting money into the bond market, and the bond market has performed very well. This is a monthly chart of the bonds, but remember, when bonds rise, the yields go down. So here we have people buying bonds up here at all-time highs, and last time we were in that area was back when, guess what? The stock market was crashing. And so here's a monthly chart of the Dow, and you can compare. You can see that money went into bonds as the stock market was crashing. And what do you know? Right now, the stock market is having a great rally, and what are people doing? They're hiding their money in the bond market. At some point in the future, that discrepancy between where money is and where it should be is going to be rectified. But unfortunately, I think it's going to be too late for those people in the bond market. When they finally do pull their money out of bonds and want to go into stocks, I think that that's probably the time and place when the stock market will once again crash. Taking a look at the U.S. dollar, it was up yesterday. We need to close above 79.14 to give us a buy signal. The euro was down yesterday. We need to close below 132.50 to give us a sell signal. And the Canadian dollar moved higher yesterday. It's taken out previous resistance, and now we're looking for a move up to 103. Next up, let's take a look at the major U.S. commodity ETFs, starting with coal. No change for coal yesterday. We still need to close above 35.86 to give us a buy signal. Crude oil moved higher on Thursday. Next target to the upside is 43.75. America's number one export item continued to move higher yesterday. Gasoline, we need to close below 55.33 to give us a sell signal on Friday. And one of the hardest products to export continued to move lower on Thursday. For natural gas, we're looking for a close above 21.45 to give us a buy signal. We had an inside day for copper on Thursday, an inside day for gold. Gold is holding support at the 50 and 100-day moving average. We're still projecting a move down to the 200-day moving average. And we had an inside day for silver. Unlike gold, silver has not tested the moving average lines yet, but we are anticipating a test in the not-so-distant future. Next up, let's take a look at the major indexes that we follow. And remember, Thursday was an inside day for many of these indexes, so not a lot of new data points. Thursday was a day of indecision. So let's move back a little and start with looking at a weekly chart for the S&P 500. This time last year, we had trouble up at the 1375 level. And so here we are once again up at 1375 and looking to see if we can break out above it. If we drill down, 1375 is also a daily target, and we're getting pretty close to the top of our daily range. And you can see we're having trouble getting through the 1375 level. And drill down even more, it's an hourly target as well. And again, we've been able to poke our head slightly above 1375, but we're having trouble breaking above it. And now Friday morning, we're looks like we're going to open lower. So no major breakdown, of course, and certainly with an inside day on Thursday, you can't confirm anything like that. So what we're looking for on Friday is a daily close below 1355.90 to generate a new sell signal on Friday. Don't think we're going to get that, but I'll be watching the 1375 level closely to see how the market handles it. Moving over, looking at the NASDAQ 100, a little bit of a different spin here. We've taken out last year's high, and now we're moving up to our next projected target on the weekly charts, up at the 26.5625 level. That's also the top of the range on our daily targets. Of course, if we break through the top of that range, it will recalculate, but that was the top of our calculated playing field a few months ago. And so here we are. We've been able to drive straight up basically over the past couple of months to that target and have not had a major break. It's also our next hourly target to the upside, so we'll have to see how the NASDAQ 100 handles that. And on Friday, a daily close below 2582.70 would generate a new sell signal on Friday. I don't think we're going to get that, but again, I'm watching the upper level of our daily trading range and to see how the market handles that, if we can break out or if we break down from here. Looking at the Russell 2000, we talked about this the other day. We haven't taken out the recent lows, but certainly we are back on a sell signal for the Russell 2000, and so a lot of people consider that the small cap index. Similar situation for the Zacks micro cap. We're on a sell signal once again, so small caps and micro cap stocks are starting to lead the market lower. Whether that gains momentum or not and pulls down the other major indexes is yet to be told. Looking at bank stocks, we poked out above a little above 200 yesterday. The bank sector has been very bullish over the last couple of months. A close below 195.04 on Friday for the Dow Jones Banking Index would give us a new sell signal. Looking at gold stocks, we had an inside day yesterday after the big down day on Wednesday. If you look at the flypaper channel chart, you can see we're once again stuck in the flypaper channel. And so the bulls are looking for a breakout of the recent high and that downtrend line. The bears are looking for a breakdown below the recent low and that uptrend line. If you stand back a bit and look at this chart, it's not a very pretty picture. We've had a series of lower highs, and so every wave of buying that's happened, people have sold into that wave and driven the stocks back down. And so once again this week we've made a lower high, and that is bearish for the gold and silver stock sector. Taking a look at Apple Computer, where Apple Computer is coming out with a new shiny object. And of course, everybody's interested in that, and so it's been a tremendously successful stock over the past couple of years. It's very overbought. Panic buying right now up through the top of the panic zones continues to move higher. On the weekly chart, this is from last Friday, and so we were looking for a move up to 526.50 as our next target to the upside. Drill down, look at the daily charts. We're getting pretty close to that level up here. And again, just like the NASDAQ, that's the top of our projected range for this stock. It doesn't guarantee it's going to hit it, and of course it can break right through, and if it does, then we'll recalculate a new playing field for the rest of the year. But right now, that is our next target to the upside. On the downside, on Friday, daily close below 512.87 would give us a new sell signal on Friday for Apple Computer. Next up, let's take a look at the Canadian stock market, starting with the TSX. Inside day yesterday, inside day for energy stocks. Financial services continued to move higher, and we talked about this a couple of weeks ago, that the resistance or the peak that we saw back in January might hold this market, and that is not the case right now, and so I was definitely wrong about that. And the stock that I was focusing on at that time was the Royal Bank, and the Royal Bank has careened through that previous high, and so done much better than I expected it would. Not all stocks in this sector are participating right now. We still have the Bank of Montreal on a sell signal, AGF Management on a sell signal. Home Capital are three stocks that are not doing very well at the present time. Looking at the gold index, an inside day yesterday, inside day for materials, inside day for metals and mining, and an inside day for the venture exchange. So inside days, again, are days of indecision, really no new data to talk about. The market's looking to see if we can take out the previous day's high, which would be bullish, or the previous day's low, which of course would be bearish. Last up this morning, a quick look at the 60-minute charts for the S&P 500 and the Toronto Stock Exchange. Starting with the S&P 500, any pullback down to the 1359 level, the bulls are still in control. If we start breaking down below 1359 on an hourly basis, we know the bears are in control. First sign of weakness on Friday is an hourly close for the S&P 500 cash index below 1369.60. Looking at the Toronto Stock Exchange, we have come down to the flypaper channel this week. If we start breaking down below 12,600, then the bears are back in control on a short-term basis. First sign of weakness on Friday is an hourly close below 12,676. Okay, that's all for Friday morning, folks, and that's all for me for this week. Have a great day, have a great weekend, and I'll talk to you again on Monday morning.